Good evening, everybody. What is going on? Hopefully, everybody had a good day. In case you wanted to know, in case you're interested, I am still a liar. The S&P is only at 69.76. We have not crossed over the 7,000 mark. When we do, I'll have a surprise. Anyway, before we get into it, please read this disclaimer, pause and read it. I am not a financial advisor. Most people that come on this show are not financial advisors. We are certainly not your financial advisor. Please take everything we say with a grain of salt. We just do a lot of research, and this is for entertainment and educational purposes only. So please pause, read this, and always do your own due diligence. So Chris should be here soon. He sent me a message at 7:02. So we'll give him a few minutes to get on, and we'll go from there. So thank you all for being here. Really appreciate it. June, what's going on? Shells, what's going on? Joker, what's going on? Seeing a lot of regulars. Thank you for being here. The Big Slow, KK, PB, thank you very much for the support. Really appreciate it. Market was pretty good today, everyone. Oh, look at this. Tanner's in the chat. Hollywood Tanner is in the chat. I think he's trying to get some inside information for Wednesday night, everybody. But he's not going to get it. He's not going to get any inside information for Wednesday night. My top 15 artists are going to slaughter his. What's up, Michelle? How's it going? All right. Market rebounded today pretty well. Really happy about that. Ethereum wasn't up much, but you know what? BMNR went up 3.5%. I'm surprised SoFi didn't rebound toward the end of the day when everybody else started moving. Oracle was up, Nvidia flat. I saw what Matt did today. I saw his little position in next. I got something for him. I made one move in the morning, and then I got absolutely slammed with meetings and didn't have time to do anything else. But I am planning on flushing everything out tomorrow, and I'll have an update for everybody. Matt's probably lurking in the chat too, trying to see what I did because he doesn't know yet. He's going to find out real soon. Anyway, I'm going to text Chris right now and see if he's hopping on. And if not, I'll just get into my deep dive or shallow dive on ZETA. See what everybody thinks. I'm actually getting more interested in it. So I'm going to put a poll out real quick. I'm just going to go to YouTube. I want to put a poll out, and I want to see how many people are actually in ZETA. Start a poll. All right, Chris will be on in a minute. So we'll give him a minute, then we'll get started. All right. Are you in ZETA currently? I think this is how we're going to start these out. I want to get a poll going, see where everybody stands on this. It's probably going to become a new position for me. And I may have to do some convincing. More no's than yeses so far. More no's than yeses. This is interesting. Lena, what's going on? Endicott, yes, we're talking about ZETA. I went through the numbers. I went through a bunch of things. The Marigold acquisition is very interesting. I reconfigured the 2028 guidance based off of how it is impacting the 2026 guidance. And I got to tell you, I think there's a lot of value here. So we'll see. All right. I got some convincing to do for everybody because we got over 200 votes already. 64% are not in ZETA. I'm not in ZETA either. And the information that I came across, went through everything. I've listened to now several earnings calls, 2 firesides, went through the numbers. I'm getting interested. All right, we're going to end the poll. 64 no's, 36% yes. So, very interesting. Very interesting. VG, a lot of people like VG. I'm with it. I started positioning VG. Full port Rocket Lab, that's not happening for me. And yes, I'm still drinking coffee. What can I say? What can I say? Oh, see, I knew he was a lurker. I knew it. Trying to get the inside scoop and what positions I did, what did I do, what didn't I do. I didn't even tell him yet. Didn't even tell him yet. Don't worry, there'll be an update tomorrow. Don't you worry. There'll be an update tomorrow, Maddie. There will be an update tomorrow. I did ask somebody to look into OSS that was in that field. Yes, that is 2 humidors behind me. Yes, it is. Chris said he'd be on in a minute. So that's a good question. And I'm in Meta. So
there we go.
what's going on, Chris?
Give me 1 second to make sure. Okay, there we go. And my Bose headphones. Just got some new headphones, so just give me a minute, Steven.
I can hear you. You sound good. Can you hear
Okay.
us?
Perfecto. Yeah, I can hear you. Let me just connect the Bluetooth, and then I should be good.
How are the headphones? You like them?
I love these, man. They're Bose had this like deal over Christmas where you can trade in your old ones and get new ones. So that's what I did. I ended up trading them out. There we go. It's connected now.
Nice.
Okay. Yeah, so I traded them up, and dude, they're amazing. Like you could barely hear anything outside of the conversation we're having right now. Like there's other background sounds completely dead. Yeah, like I love these things. Bose makes some really good headphones.
They make great stuff.
Yeah. Yeah. So before we get started today on ZETA, I'm going to admit something. I did zero research on ZETA, and I'll tell you why. One, because I had so much going on, but 2, because I wanted to have a very unbiased opinion. And the thing is, because you did all the research, I'm going to try to have a more adversarial role in this so that this way we'll try to poke holes through the thesis, right? So I understand everyone is bullish on ZETA right now on X, on Twitter. Everyone's like, hey, ZETA is the next 10X stock. Great. Love to hear these pitches. But I think if there's 2 people that have biases internally, I think what it does is it kind of like dilutes it and ends up becoming more of a feeding frenzy. So if that's okay with you, let's
Yeah.
go ahead and do that. So I'm gonna ask, you're gonna first outline the thesis, and then I'm gonna just try to poke holes in that thesis just from being an objective person. And like I said, if my reasoning is not good, right, then of course people can decide whether or not they want to be in Zeta or not, right? So we'll go from there. So
Yeah.
first,
So
what does Zeta do?
you are probably going to try poking holes in the wrong person because I don't understand Zeta the way some of these other people do. I've
Mhm.
listened to 3 earnings calls and 2 firesides and went through the numbers, went through the latest acquisition, and I'm seeing a lot of things I like from a forward growth perspective, and I reconfigure the 2028 numbers based off of the 2026 updated guidance for the new acquisition. So I put together 3 spreadsheets for their numbers, no analyst stuff. This is pure Zeta
Mhm.
numbers and backdooring into 2028 based off of certain things. So I'm going to go over a few things. So, real quick, for everybody that does not know what Zeta is, it is an AI marketing cloud that leverages advanced AI. Now, when they say advanced AI, what their CEO said in the latest fireside chat is that in 2017 they started working on AI. They were doing 50 million in EBITDA, and he went into the boardroom and Matt, I swear to God, you gotta try not to make me laugh, Matt. Swear to God.
What is Matt saying? Matt Zeta has a Bose partnership. Thanks, Tanner. Why don't you get on here? I mean, I think I think you're one of the guys who's pushing for Zeta, right?
Tanner's in the sauna, relaxing. He's listening to this in the sauna. He's gonna cold plunge.
Okay. I mean,
I'm telling you, Tanner's going to live to 200. He's the next Brian Johnson.
okay, interesting.
Yeah. So in 2017, they were doing 50 million in EBITDA. And
Mhm.
he goes into the boardroom, says to them, I'm redeploying 400 engineers, and we're going to make no money for the next 3 years.
Okay.
And everybody looked at him like he was crazy. And he explained the thesis that they need to reconfigure everything.
Mm-hmm.
Oh,
So, so,
Tanner.
so before you do that, share my screen, because I think while you're explaining, I think if we see the numbers fundamentally, it'll
You're
kind of
not
help.
sharing anything.
Sorry about that. Let me just share screen. So what you just said right now is that they they were growing their revenue base, which is good, right? But at the same time, their EBITDA was going down, right? So you can see that EBITDA. So what you just said is right here. So
Yep.
their revenue is going in one direction, right? Which is great for a business. But at the same time, is that business actually making money? And from here, you can see that EBITDA was plunging downward. So I think that the cycle that you're talking about is this move down here, right? So go
2017
ahead.
to 2020, I believe,
Yeah.
that area.
Yep.
So they
And it
reconfigured
shows right
the
there.
entire business and retooled the entire business. So their platform makes it easier for marketers to acquire, grow, and retain customers more effectively. Through the Zeta marketing platform, their vision is to make sophisticated marketing simple by unifying identity, intelligence, and omni-channel activation into a single platform. They have a huge base in the Fortune 100 companies. They have 15 straight quarters of 20% plus revenue growth and 19 consecutive quarters of expanding adjusted EBITDA. Now, I hate adjusted EBITDA numbers, but that is what I have to work with from their projections out. They don't give guidance on flat EBITDA, which I don't like, but is what it is. So I want to show you this. Let's get their slide deck up, show everybody this. So 18 consecutive quarters of sequential scaled customer expansion,
Mhm.
which is interesting.
Right.
The ARPU growing, year over year.
Okay.
Let's see. 44% of Fortune 100s use them. 11 of the 17 largest consumer retail companies, basically, the companies in every sector use them. They say 6 out of the 13 largest technology and media companies. So they're not just dealing with small middle market. They're dealing with every type of company, which is interesting to me. Now, they just did an acquisition, and I'm going to bring those numbers up, and I'll bring the spreadsheets up. So they just acquired Marigold. I think that's how you pronounce it. Let's say, yeah, Marigold acquisition. So their numbers for 2026 pre-acquisition was 1.53 billion. And then due to the acquisition, their guidance increased to $1.73 billion for 2026. So what I did was I reconfigured everything. Let's start here. So based on where they're saying 2025, I'm going first block, where they're saying 2025 is going to end up revenue and 2026 is going to end up on their guidance. Their growth is going to reaccelerate in 2026 year over year. So they did 38% revenue growth last year. They're expecting to do 28.5% this year, and then see growth reaccelerate next year to almost 34%. They've also beat and raised for the past 17 quarters, which is very interesting. So it's a Noto-like situation with sandbagging every quarter. The next block.
Before you go that, I like the numbers so far, right? I'm looking at this and positively, I'm even from the analyst projections, the numbers look stunning, right? Like, this is a business that's going to do amazing in terms of the numbers from the projections. The question is, what do they actually do? Which platforms are they on? Are they on linear TV? Are they on the internet? Are they on apps? Like, what's their niche? Like, where do they, like, I get it. They're AI software companies, but where do they use that AI software?
So my understanding is,
I think you're on mute.
Hold on. Can you hear me? I'm not on mute.
Or is it me? Damn it. It's like amateur hour here. Sorry, go ahead, Steven.
Can you hear me?
Yeah, I can hear you.
Okay. So my understanding is that it's throughout all areas.
Mm-hmm.
So when I look at this in 2025 through Q3, this is not projections. This is where we are year to date right here.
Yeah.
The nice thing is gross profit expanded a little bit. EBITDA margin expanded quite a bit, obviously, because they went from negative in 2024, flat EBITDA, not adjusted, to 54.5 million. And cash from operation margin expanded to 14.5%. And the trailing 12, they're doing 159.7 million. Now, when I look at 2025 and 2026 guidance, we're getting 33.9% revenue year over year, adjusted EBITDA growing at 40%, and free cash flow growing at 42%. Free cash flow coming in next year at 224 million, and margin expanding on both ends by a little bit. Now, the big thing for me is this Marigold acquisition, because for 2026, we had an additional 205 million in revenue added for their guidance and 31.4 million added to adjusted EBITDA, 15 million added to free cash flow. So 13.4% revenue increase, almost 9% on adjusted EBITDA, 7% on free cash flow. When I add that in and readjust for 2028 based on that acquisition, the guidance that they gave in the Q3 deck for 2028 was 2.1 billion revenue, 525 adjusted EBITDA, 340 free cash flow. If we add these additions in, we come to 364.4 million in free cash flow. If I put them at a 30 multiple, which is probably low for a company like them, puts the market cap at almost 11 billion, and it's a $6 billion company. So I'm looking at this as this could be a compounder over several years, especially if growth can continue accelerating. And it looks like from everything I'm seeing that it can, especially with this acquisition.
A couple of things.
Yep.
What is the market multiple giving on other software names that are not software, sorry, AI marketing tools that have similar multiples? Like, what is the market giving that value on just a pure EBITDA basis?
That's a good question. Let's see. So ZETA is considered application software.
Mm-hmm. Let's do it on a forward basis, because they are growing, right? So they should be given a higher multiple just because of their growth rate. So like benchmark them against like something like Apple. Right, exactly. Who's their main competitors?
If anybody in the chat knows who their main competitors are, let me know, because I am looking at a long list of companies that probably are not their competitors.
Even if they're not direct competitors, what is the average in that specific sector? Like marketing, like what would you put it? You know, AppLovin. I think AppLovin would be a good AppLovin TTD, right?
All right. So AppLovin. You want market multiple on what, free cash flow?
On EBITDA. Let's just do on a forward EBITDA basis. So whatever the forward EBITDA is on these guys, and you could weigh it against their growth rate, and then go from there.
All right, give me 1 sec, and I will tell you.
Because clearly the EBITDA is growing at a very brisk pace, right? So that's always good to see. But at the same time, like, what is the market willing to pay a company like this on a forward basis? Okay. So while you do all of that, I can just share my screen. Go ahead, share the screen right here.
Yep. 1 sec.
Okay. So this right here on a forward EBITDA basis right now for ZETA, it's about 17 times next year's EBITDA number. Right now, they're growing their EBITDA at a very fast pace. So you got to remember, as long as they can keep that EBITDA number growing at that pace, that growth rate, it's a big change. So we can kind of put that in here too, EBITDA growth rate. Let's see. EBITDA margin. I don't like looking at the CAGR, but I'll use it. 3-year CAGR, probably closer. Are you actually like doing that by yourself?
Yeah, man.
Okay.
Yeah, man.
Wouldn't it just be easier just to get fiscal AI?
No.
So it does it for you?
No.
You know? There you go. So you can see here, AppLovin on a forward EV to EBITDA basis is trading at a 37 multiple, and ZETA is trading at a 16 multiple. Now, what is the growth rate on AppLovin? So we can kind of take a look at that and say, look, so let's do AppLovin. AppLovin's growth rate on their EBITDA, their change rate is, let's do TTM to knock out some of the noise. So look at the growth rate on EBITDA for AppLovin. It's growing. It was growing at 140%. It's kind of slowed down to 83%, which is still very, very high. Don't get me wrong. This is like exceptional. No one grows their EBITDA like that. That's a great amount. And it's proven that they've actually been able to sort of maintain that growth rate, with the exception of, I guess, 2021, that little amount. So they had a reacceleration in growth rate to about 138%. Now it's slowed down to 83. And then if we benchmark that against ZETA, right? ZETA's EBITDA growth rate is let's see. What is this? This is total revenue. So we get rid of this thing. So technically they've had negative EBITDA, so you can't really use that as a benchmark, but you can see that they're going in the other direction, right? So it's negative 218% EBITDA, but next year it'll go in the other direction. So let's just do this.
EBITDA. I got it done.
You did? Okay. So the CAGR that the EBITDA is CAGRing at is almost 277%. So you can see that the transition to positive profitability for ZETA is exceptional. So if they end up getting a multiple similar to AppLovin, there's a lot more upside for this company than what's currently here. But that's based on what the market is willing to pay. So if this thing gets similar multiples to AppLovin, there's actually has a good amount of upside ahead of it, especially because their EBITDA numbers that they're projecting in the future are pretty substantial. Let me just put it here. Sorry. Annual. And you can see here that their EBITDA is going to go from 64 million to close to 450 million, according to analysts. Okay, so and I'm not saying analysts are going to be 100% right, but that is a huge step up in EBITDA basis, right? So let's say you give this a respectable 20 multiple in 2027 on 450 million. What is that? 10 billion in market cap, right? If you do a 20 EBITDA, which could be like a bear case, you could put in maybe 30 on a base case based on what you see with AppLovin. So what would that be? That'd be like, what's 450 times 30?
13,005 or 13.5.
Yeah, 13.5 million. Now, question is, are they buying back any shares?
Yeah, they just issued a buyback program.
So, and does AppLovin do a similar buyback program?
That I don't know.
So we could sort of project out what their free cash flow is going to look like for the next 2 years, and then use that buyback program and kind of do a model on what the total number of outstanding shares are going to be by the end of 27. And then we'll know exactly what the market cap, plus we'll get a stock price, right, of a probable stock price. Because right now, even at 452, so if you're looking at a $13.5 billion market cap, which is base case, that means that, what is that? What's the current market cap on this?
5.7.
Yeah, so you're looking at, double and then some on base case. On a bear case, right, you're probably still looking at a double.
So here's where we are compared to those companies. Now, keep in mind, they don't give us guidance on regular EBITDA. They give it on adjusted. So these two lines are off of adjusted EBITDA, but real free cash flow for 2026 and 2028. So right now, AppLovin trading at 57 times EBITDA, 65.5 times free cash flow. TTD, 29 times EBITDA, 32 times free cash flow. Right. ZETA off of regular EBITDA, high on price to EBITDA, 110 times. But free cash flow is 38 times, not that much more than TTD. Now, off of 2026 guidance, they're trading at 27 times free cash flow. And based off of 2028 guidance adjusted for their latest acquisition, they're trading at 16.4 times free cash flow. And if you want to go multiple to adjusted EBITDA, you got 15.5 times 2026 adjusted EBITDA and under 11 times 2028. So there's a lot of growth expansion. And I think this is something that if their net dollar retention, if memory serves me correctly, is 114%, and it's been expanding with the latest acquisition and all the things that they are doing, it seems like they may be able to expand that net dollar retention and keep the forward growth alive. And if we are really in a AI driven market where these types of software companies are going to go head to head with SaaS, this looks really interesting to me.
Yeah, I mean, if you just use the current multiples, what the market is willing to give them, I think it easily gets to at least double from here. I mean, it's pretty obvious, right? It's a very low multiple,
and they could get acquired by somebody too.
That's another possibility as well.
Yeah.
And see, this is the kind of opportunity I would hope some asshole like PayPal would take into consideration, because it doesn't cost them more than 1 year of free cash flow.
Free cash flow, right?
But it grows them and it gives them a growth engine, you know, and they could layer that on. I mean, look, clearly they've got a product that seems to be working because they've got a tremendous amount of counterparties, right? Like, look at the Fortune 100 companies that they have. It's a pretty good indication that they're actually a legitimate company with legitimate operations. I mean, you know, if you just had a bunch of no-name companies that are small time, very little spend on ad and marketing, probably not necessarily the business that you want to touch. But I mean, the question that I have for you, besides the numbers, because you did a good job just highlighting the numbers, but what is that uniqueness that they have in their platform that gives them an edge over other rivals like TTD, like AppLovin, like Meta, right? Meta is another beast in the room that does AI targeting. So
the big thing that they're talking about is the OpenAI partnership that they just announced is going to power Athena, which is their latest product, and they're positioning it to be an answer-driven marketing agent where you can legitimately talk to it, tell it what you need, and it configures everything to you. And they're saying that every dollar, and this is the big differentiator for me, they are saying every dollar that their customers spend with them, they get back $6. So you're getting 6-to-1 results, and that's their big focus right now, and creating a ton of value. They just did a huge event that was oversubscribed, and they are right now in the driver's seat of this, in my opinion. They're going for subscription mix, cross-selling. To me, this could be a very big compounder. So 200 million stock repurchase program through 2027.
That's fine. The only
I know you would ask about that also.
The only challenge with that is 200 million on a $10 billion market cap is not a lot. You know, like, I get it. It's a lot of money, but it's not necessarily a lot of money in terms of EPS growth, if you're thinking about it. Because the thing is, the stock price has expanded so fast already. If, let's say, this was at $10, I think the amount of buybacks would be a lot more meaningful. So yeah, I mean, I don't necessarily think that this thing is like a 10xer, but I don't think that this is not a good company to invest in, you know? So I think especially if you have a really long-term time horizon, a company like this is, with the amount of free cash flow and EBITDA that they're doing, even if they maintain, they slow down their growth rate significantly over a long period of time, like TTD has, it could still do pretty well. It's a good investment.
Yeah. So Chris, their marketing operating system focuses on email, web, social, CTV, video, chat.
Can you share that?
I just did a very quick search on ChatGPT to get that answer.
Okay, got it.
I'm sure it's in the deck somewhere, but I didn't want to thumb through it to get it. I can see it. I can see where in the deck it is, but that's where they're saying it is. So it's pretty much everywhere.
Okay. Yeah, to me, I look at these things and it's like, okay, what's that unique identifier that gives them that defensible moat that lets them keep maintaining that growth vertical, right? Like, and the other thing is with a company like this, and this is something that everyone in this investing community probably, everyone likes talking to Chris, not on a camera. I would say that this company is being priced like a growth stock. If there's any point where the growth starts to materially slow down, then the multiple can get re-rated much lower, right? So the estimates right now are all based on the current estimates on growth. So if there's any sort of economic challenge and marketing budgets get slashed, then this company is going to take a hit. So not only do you want to know where you are with the specific company and how they're planning on growing, but then what is the macro environment for their core business? If the macro environment starts to slow down, people start cutting their marketing spend, the growth rate would naturally slow down, in which case the EBITDA multiple would compress probably down to like the mid-teens, in which case then the stock price is not overvalued, but it's not undervalued at current prices. Right. So you'd have like a dead stock for the next 2 years if yeah, that's the scenario that happens as from a risk perspective. So I don't know. I don't think that this is a bad investment, to be fair with you, just based on numbers.
I'm thinking about starting a position. I like the CEO. I like that they've done 17 consecutive beats and raises. And that makes me think that they're going to be able to continue growing, and that the forward estimates could be a little light on their end. And if that's true, then this could be, and I know a lot of people are piling in. I know it's run from 18 to 24 recently. But if I look at this over the next 3 years, this is something that could double or triple, depending on what happens, if it gets hyped up or not, maybe more. But at least in my opinion, I think you can get I can get a double out of it. That's how I should phrase it, in the next 3 years, which would outpace the market by a large amount. And what I'm looking to do is scale into it slowly in case it pulls back so I can get more. And I'm not just going to buy a whole bunch at 24 after a run.
Yeah.
This is also something, unfortunately, and I hate investing like this, but we all saw what happened with Robinhood. We all saw what happened with Palantir. Things can get expensive quick, and things can get unreasonable for extended periods of time. This looks like something that has a lot of growth potential, and this is something that I think I want to be in case this thesis actually plays out, because this could have a lot more alpha to it than other investments. And I happen to like the trajectory of the numbers.
Makes sense. Now, this is where, let me just share. Can you share my screen? This is like a cautionary tale on people who invest in companies like that are heavily focused on marketing. One of the challenges you run into. So before I present this to you, this is the growth rate, like the total revenues for TTD, right? Trade Desk. Trade Desk has been growing, and you can see here there's very few periods where they've actually had material slowdowns, but for the most part it's like a nice secular upward trend. The challenge is when you're investing in a company and they're doing well, but when your stock price gets heavily correlated to your growth rate, you run into problems, because what ends up happening is everyone expects you to grow at this constant pace forever, right? So you can see here during COVID, their growth rate went from 21% to like 53%. And everyone assumed that there could be no change from this. Like this, they would always grow at 50%. And the stock price reflected that, right? So if you see here, look at this upward move in stock price. It went all the way up to $108, right? And then everything started to kind of come crashing down at 23, and then it started to re-accelerate its growth a little bit, and everyone started to get bullish again, and you could see the stock price started to just skyrocket again, and it got to about 134. I'm sure that they instituted probably some buybacks, some EPS changes happened here, right? But then ever since then, they've started to kind of, their trajectory on growth has been slowing down, and they've gone from 26 to 21%. And now all of a sudden everyone said, oh my God, this is no longer a growth company. They sold it from $139 a share, now down to 36. look at that massive move down. Like imagine being the guys that bought at the top over here on TTD and sitting it here. So sometimes it's not just a matter of, hey, is the company still growing? It's also a matter of where's that growth? Is it slowing down? And when things start slowing down, that multiple re-rating can be pretty violent, right? So if you look here, their EBITDA growth probably slowed down simultaneously. So let me just clean all this up. Yeah, so you can see here their EBITDA growth. They had like some unusual spikes here, but it's growing. It went from 98% growth rate on their EBITDA to now 38%. So why would someone give it a crazy high EV to EBITDA multiple? And we can kind of see that in their ratios probably. Sorry guys, give me 1 second. Ratios. So at one point, the EV to EBITDA, which is the enterprise value to how much EBITDA they're actually generating, had some probably massive spikes. So it was at one point in 2023, and let me just layer on the stock price so that this way people can see. Oh, stock price is already there. Sorry. Okay, so stock price. Okay, so let me just bring this a little bit closer so everyone can see. Okay, you can see here that at one point their EV to EBITDA was almost trading at 216 times, and the stock was just going up, and then just came down. That rating, hold on. I hate when the charts have these unusual spikes up, because then it really like destroys the visualization. But you can see at one point in July of 2023, they were trading at a 216 times EV to EBITDA, present EV to EBITDA, not future, but present. And at the time, the stock price was 88. The market took this thing to almost 135, but probably because their EBITDA started to grow at a fast pace. And this is where you would look at on a forward basis as opposed to just your current. Let me do forward EV to EBITDA.
And it looks like the trade desk earnings growth slowed down, and that was the big reason why it killed them this year.
Yeah. Look at it on a yeah.
Sorry, the analyst community has them accelerating next year and in 27. Trade desk actually looks pretty interesting to me, looking at the forward estimates.
Yeah, I mean, if you look at this on a forward basis, it's trading at a 13 forward EV to EBITDA multiple, which is the cheapest among all of them. But the problem is, this thing is it a growth company anymore, or is it just a value company? I mean, it's gotten re-rated down.
It could be a hybrid. If you look at the forward estimates, they have mid double-digit growth, 16% on revenue and 15.5% the following year. So over 15% growth in 26 and 27, according to the analyst community. And EPS growth is 17.5 and then 18.5%. So they're expecting EPS growth to accelerate next year with Trade Desk. Trade Desk is the next one I want to look into.
So right now, the PE is still a 42, which is not cheap. I mean, they are growing at a double-digit CAGR on their EPS, right? So let's kind of just put that on there.
Wait, Trade Desk?
Yeah.
Trade Desk on this year's expected earnings is trading at 21 times.
This year's expected, or is it?
This year's expected. They're expected to do $1.78 of EPS in 25.
26, you mean, right?
25.
You mean 26, because we're in 26 already.
But Q4 is not reported yet.
Okay, that semantics.
I'm just saying.
I know what you mean. Now I get it. We're talking. I'm talking about present tense. You're talking about earnings report.
Yes.
So, okay. So their diluted EPS is. Let me just put it in double digits, so this way it's easier to see.
And I do have the answer to your previous question, which I'll show you when we're done with this discussion.
Okay. So here's a question. Right now, the EPS is looking like about 90 cents on a TTM basis. It's trading at what price? What's the stock price right now?
For a trade desk,
Yeah.
36.90.
So then how can it be that PE? Like, what do they have? Like, magically, the Q4 is going to have some crazy, like, catalyst?
I don't know anything about the trade desk. Couldn't tell you.
Yeah.
22 analysts have them at $1.78 of EPS in 25.
$1.78.
$1.78.
For all of 20. Okay, so here's the thing. Last year in EPS, they did 40 cents in Q4, right? So let's say they did 50% more than that. That would be what, like 60 cents? So then it's like 60 cents plus 10 plus 20 plus Jesus, man. Why don't you just okay, so they did 23. Let me just pull out the calculator. Okay, so 23 cents plus 10 cents plus 18 cents. Plus 0.18 plus 23. So 0.28 plus. So it's 51 cents. So you're telling me they're probably going to do like a crazy number in this?
Maybe this is normalized. I'm not sure, but these are the EPS estimates for the year. And then 26 and 27.
Are you sure, dude? I'm
showing you what they're showing.
Okay. December 20th. What is it on NASDAQ? Stop using Seeking Alpha. What is on NASDAQ?
I mean, and then this is the growth. Big growth rates too. Trade Desk does look interesting right now.
Let me do research and look at the Morningstar report. 1 second. So just share my screen real quick. And it's rated as a 4-star, fair value 60. Let's see.
Chris, it's no okay. I know why they have it as they're going off a normalized actual, not gap.
Okay. There you go. It always ends up being that adjusted BS, man.
Yeah, EPS normalized actual, not gap.
Got it. So the other one's gap. This one.
The other one's gap.
Well, according to geez, man, look at Morningstar. Morningstar's rated Adobe as like a super undervalued stock.
Well, their numbers are incredible.
Fair value for Adobe according to Morningstar is like 560.
Yeah, Jesus. Everybody's worried that AI is going to take users away from them and that they're not going to be able to implement AI good enough to retain those customers. I mean, from a numbers standpoint, Adobe looks like a grand slam.
Okay. So here's the forecast model from Morningstar. Okay, this is not mine. This is not Steven. This is just Morningstar. Okay, so their dividends, they're not doing dividends. Adjusted earnings per share. Right here, 88 cents. And then 2026 is 22 cents. And then, so once again, where are you getting that number from, Steven?
It's their EPS normalized, is what they're saying, which I'm not sure what normalized means for them and why it's not going off a gap. Well, it could be impairments, because if you think about what Meta did, Meta's normal, I'll tell you exactly. It probably just takes out impairments, because in Q3, Meta did $1.05 gap. But if you take that impairment out, they did on a normalized basis $7.25.
Okay, so this is another great talking point. Whenever these companies, they do their reporting, sometimes they have these one-time charges that don't get reflected in this. So if, let's say they're saying adjusted, whatever, that's the company saying, hey, listen, if you take away X, Y, and Z, we actually did X numbers. So that's what it is. Me, I personally don't care about what the company says. I'll look at on this. If it legitimately is a one-time thing, then I'll definitely like take that in consideration. But from what I can see, 88 cents is what they're likely to earn for 2025, which means that $36 is still a 40 something PE. right? Next year, they're projected to do $1.22, which is actually impressive considering that that's a 50% growth rate on their, close to 50% growth rate on their earnings.
On their gap, which is
on
very
their gap,
yeah.
which is actually interesting. Yeah. And looks like they're going to be able to maintain that adjusted earnings per share for all the way into 2029. So at $2.50, like I said, let's say you do a 20 PE on that, $2.50 by 2029, multiply that by, I don't know, a company like this, a 20 PE. What would you give a PE like this with
For Trade
slowing?
Desk, I mean,
Yeah.
I don't know if you can really assign a 20. 20 seems kind of low compared to where like Coca-Cola trades. They're growing quicker. I mean, I don't want to get crazy, like throw out some bullshit crazy number, but I think 30 is a number that seems realistic for them.
Okay. I mean, look, they're looking, they are growing their EPS.
Whoa, go back up. What the hell was that high number on the?
What
does that say?
This is like the analyst estimates, like some.
No, I know, but what is it?
$142 a share. 142. But that could this could be someone who basically they just didn't update their
I get
their
it.
price
target.
target.
The average 62.
82.
82. Trade Desk, we're gonna have to look into.
Yeah, I mean, these are the people, the analysts that are covering it. So you can see the 4-star, 3-star. There's no 5-star analysts that are covering it. There's a 4-star. They've re-rated it down a little bit. So they went from 50 to 50%. So Michael Morris from Guggenheim. We can just see all analysts and see who's got the highest target. But the analyst price targets are like Jefferies downgraded them to 40, Guggenheim, Wolf Research to 45. Yeah. I mean, this is where I would say look at like 2030 numbers. 2030, the forward PE is 8.8, right? If they're able to maintain that EPS growth rate, which is pretty solid, maybe you're right. Maybe a 20 PE is being a little too
low. I wouldn't go past 30 because I think that's kind of egregious, but
yeah,
I think the higher band of 20 would make sense. Throw ZETA into this. Let's see where they're at.
Well, let's look at this. So their earnings EPS by 2030, according to analysts, that's not a lot of analysts, by the way, just, it's like $4.30. So let's say 25 PE. You think that's fair for a high margin company like this buying back shares? Yeah, I think 25 is okay.
I don't hate it. I mean, look, it's hard to say that somebody deserves more than a 25 or 30 when Amazon's trading at a 25 forward.
Yeah. So 25 times 430, like it's like 100 and what was it, 120 something by 2030, which is like a 4x from here for TTD. Right? Which is not bad.
TDT is interesting. So before you throw ZETA in there, I want to show you one thing because it's applicable to Trade Desk. So in the back of their deck, they're saying, and I would love if there's any marketing specialists in the chat, if you could let me know if this is true. I can't say that it would be or wouldn't be. I'm not in marketing. But according to ZETA's deck, they're saying that they're the only platform that consolidates data management, marketing automation, and engagement, which I would think is valuable to a lot of companies. And that's why they're saying that for every dollar spent, they are able to generate $6 off of every dollar spent with their platform.
Yeah. The only thing I'll say about this is these are just projections. I mean, no one can tell you what the company is going to be in 2030. Like, I don't know how many people can give you like an estimate that's going to be accurate, right? So 430 is what everyone is saying, but yeah.
And for what it's worth, they were, when the 2024 numbers came out, at the top of the leaderboard from Forrester, for whatever the hell people want to put in that.
Interesting. I mean, this is where you'd have, like, so we've determined that from a number standpoint, this is a buy, right? The question now is the qualitative.
Yeah.
Is there a durable market?
So look at this Chris. So the Q3 2024, Zeta was already top of the leaderboard. They just acquired Marigold, which was ahead of Salesforce and Adobe.
That's interesting.
So this is actually pretty interesting to me. I like the numbers. I don't understand the sector. I'm not going to pretend to understand the sector. I've never really invested in a marketing company. Marketing is different than advertising. And if it can do everything they say it's going to do, and if this is going to be the leader in AI for marketing, I think this is something I want exposure to.
Yeah.
There's all right. So now they're saying, I would love to know what the actual TAM is of this.
I don't know, man. This is like one of those things that you got to research. I mean,
yeah, I have no idea what the TAM is, but from what I understand about numbers and valuing companies, I do think that based on the growth rate, based on what their projections are, based on their history of beating and raising, this has Noto-esque quarters, and I'm going to start a position this week.
Okay. On not on Trade Desk, on
Zeta. Trade Desk I need to look into, but the numbers from the couple minutes that we did and me just looking at the financials, Trade Desk looks really freaking interesting. I just don't know how disrupted they're actually getting and if the forward projections are legit or not. I have no idea.
Yeah. See, this is the dichotomy of check this out from a return. Share my screen.
Yep.
Sorry, sharing the wrong thing. So share entire screen. Okay, there we go. So both of these things, one of them, Trade Desk, is what Tanner has, and that's negative 47.
Yep.
But he also has AppLovin, and that's up 77%. So sometimes these pair trades can actually be very profitable, right? Where you can kind of hedge one out against the other. Like you don't have to necessarily pick a market winner and one can counteract the other. So if you see this, if you blend these two things together, yeah, you might be down on Trade Desk and now it's a value proposition, but you see that the incumbent leader is killing it. So the incumbent, I mean, not the incumbent leader, the newcomer is killing it. So the newcomer gives you that alpha. So in terms of a balanced portfolio, you don't necessarily need to just be like, okay, you know what? Let me just invest in a bunch of these guys that are likely to outperform. But yeah, it's interesting to see the dichotomy in his thesis that ended up going in opposite directions. It was kind of like me too with Eli Lilly and like Novo Nordisk. Like I did not know Eli Lilly was going to win or Novo Nordisk was going to win. All I said was, well, Eli Lilly's gaining market share and Novo Nordisk is like the market leader who's getting their share eaten, but at the same time it's trading at a valuation is getting discounted. So instead of trying to bet on just one to win, and it's almost like when we go to Vegas, like just betting on red, and if it doesn't come out then you lose, or you could actually bet on red and black. So but you just have to do it at the right timing so that you actually get some alpha out of it. So I'm down 19% on my Novo Nordisk, but I'm up 34% on my Eli Lilly, which means that I have a 14% positive gain on the two if you average them out. Now, I do think Novo Nordisk is going to recover a little bit later this year, in which case that should sort of help the portfolio a little bit. So, yeah. Interesting. It's interesting.
So I got a question. We have Sachin in the chat. Sachin, are you in this? You're normally in a lot of this different stuff. Are you in this? I'm interested. I'm not seeing him respond.
Chris, what's the update on UNH? UNH is recovering just like every other managed healthcare company, except they are about to get ushered into Congress next year. I mean, not next year, in a couple of weeks. You know that they're doing like congressional hearings now on the managed healthcare companies.
I'm not following it.
You're not following it? Yeah, I mean, CNC bounced back, Elevance bounced back. Like a lot of them have done really well. Let me share my screen 1 second. Sorry.
Hold on, before we move on, we'll move on to that in 1 sec. So I think this is why TTD and AppLovin are going in different directions.
Mm-hmm.
So on a quarter-over-quarter basis, TTD year over year is down to 6.5% growth, whereas AppLovin is continuously, or maybe not continuously, but they're still above 10%. And they're doing double the revenue on a quarterly basis, and they have a higher growth rate.
Well, one is getting disrupted, right? Is that
Yeah.
the thesis here? If they're
I mean,
competitors, I don't know if they're
I would-
competitors. Maybe someone in the chat, y'all know if they're competitors or not. But
So here's the other thing. What December is their biggest month, obviously, because of holidays and whatnot. December 24 was not bigger, or I'm sorry, Q3 25 was not bigger than Q4 2024 for Trade Desk, but Q3 2025 for AppLovin was bigger than December 2024. That reads like Meta. So that's pretty interesting. And that's probably why, because you're seeing a slowdown here. So I don't know. I got to do more work on TTD. I've never looked at it, but the numbers are interesting from a value perspective.
okay.
Oh, here we go. Sachin, here we go. I am not in app TTD. What about Zeta, Sachin? Are you in Zeta?
Check this out. This is managed healthcare, which has been
Sachin
recovering.
likes Zeta. I like it. Sachin
This is managed.
Not wrong.
Sorry, let me just do. So these are the managed healthcare companies. So at one point UNH was like 590, 591. It's got low to like 250. There's this one feature on here where I can do, there it is, by company. There we go. So Elevance went from about 540 down to 283. It's bounced back to 374. Centene is back to 46. It was trading here around 78. Molina, Michael Burry is ultra long on Molina, by the way. I don't know if you've been reading his posts on it, but that's going to be interesting. So I'm doing more research on Molina right now, but Molina is about 181. Humana hasn't recovered. They're at 276. And United Healthcare is slowly recovering, but they're at 340 right now. The problem with United Healthcare right now is there's like a lot of stink on it from Medicare Advantage, like investigations on how they may or may not have been inflating charges and stuff like that. So I think they're going to cross that bridge just fine, because everything that they're doing is above the board. It's just not necessarily something that people want to hear, that the company that you're invested in is getting pulled up to Congress, right? In which case people will give it a trim down on valuation. So United over time should recover eventually, but the recovery may take longer than people are expecting. So I actually took some profits on United Healthcare this morning. Just, I didn't like clear out my entire position or anything, but just there were some higher strikes that I had. I just brought those strikes down so that this way I'm just hedging, because I do have substantial amount of gains, and now I'm past that December 31st mark. So I figured the best thing to do is just redeploy. Among these, I don't know, have you done research on Elevance by any chance?
No, I don't even know what that is.
Yeah, I did an episode with Matt with Elevance. It's worth looking into, Yeah.
Yeah. So Tanner wants us to talk about meta compute. I was actually going to talk about that tomorrow, but Zuckerberg came out with a pretty big announcement today.
You think that's a play on future cloud or no?
I think your theory may be coming true. I just don't know if it's going to come true in 26 or 27.
I mean,
I feel like they're positioning for it.
no, some people are talking like saying that, oh, like it was so weird. I got this one thing on X. People were like, if Meta ever starts doing cloud compute, I'm gonna sell it immediately. And I was like, that's kind of rough. Like, what's the reasoning behind that? Like, it's like, bro, like how many more like how many more people can you get on Instagram? How many more people can you get on threads, quote unquote, if anyone's actually using it, or
You know what
Facebook?
I gotta say to somebody like that?
What?
If it makes dollars, it makes sense.
Yeah, that's what I'm saying. People thought Google was dumb as shit for getting into cloud. I don't know if you remember, what's his name? There was this one guy who was like super critical of Google, saying GCP will never make money. And it's like, what? You're telling me Google, one of the smartest like shops on Silicon Valley, can't figure out how to make money on cloud? Like, what is this? And so now one of the growth engines of Google is their cloud, GCP. So this notion that, oh, if Meta starts to do cloud, they're gonna immediately like sell. I'm like, based on what? Like, how do you think they're going to maintain their growth rate over a long period of time? Like, how many more incremental Facebook users you think they have? How much money can they possibly squeeze out of the ad supported network that they have? Like, they need other lines of business to maintain growth. Any business that's not investing in growth right now, and everyone will give Mark Zuckerberg a lot of shit right now, saying he's spending money on all these data centers and everything. Bro, if you don't spend the money, you're going to die. That's just how it is. Eventually your competitors will spend that money, and you'll be left holding yesterday's technology, and tomorrow you're going to be disruptive. You can be disrupted. So yeah.
I'm planning on talking about Meta tomorrow. I need to read more up on what Zuckerberg said, but it's very interesting that Meta Compute is looking to construct tens of gigawatts of computing infrastructure this decade and hundreds of gigawatts more into the future. You're not setting up for that unless you're looking to do, in my opinion, some type of hybrid cloud.
Yeah.
So,
my guess would be that something along the lines of they're probably going to use all their AI models and everything else to sell to customers, maybe even to enterprises. Like one of the things I saw was that Meta put someone who was affiliated with the Trump administration in charge of their marketing or something. Let me see. Like it just came out today. So Meta, right here, Meta names Trump advisor to their board.
I saw that. Yeah.
Right here. So Dina Powell McCormick, share the screen real quick. So right here, Dina Powell McCormick will serve as new president and vice chairman of Meta. Previously served as deputy national security advisor to Donald Trump, among other senior leadership roles.
I mean, Meta's in a favorable position. They have Dana White on the board, who's in with the administration. I mean, don't sleep on Zuckerberg. I've been saying it for a long time. People don't want to listen. Don't sleep on Zuckerberg, please.
He's ruthless, dude. Zuckerberg is ruthless, man. Like this guy, did you hear the story of what he was doing? He was going and like door dashing to like potential like open AI like researchers, or he was like delivering soup to them and shit to get them to join to join Meta. I'm like, Zuckerberg, like this billionaire, is like delivering soup to people. Like, what the hell is going on here? Right? But that's like the ruthlessness that this guy has. He'll just randomly show up at your door and be like, hey, I'll throw $1 billion at you if you want to leave OpenAI and join me. And people think I'm joking. Like, look, check this out. Look, share the screen again.
Yeah, give me 1 sec.
Yeah.
Yep.
Yeah, OpenAI's chief researcher says Mark Zuckerberg hand-delivered soup to an employee in a recruiting effort. I mean, that is the level of demand that Zuckerberg has in making sure that he's going to get somewhere. This dude is out here delivering soup to people in Silicon Valley. The CEO. so that he can get some time in, you know. Crazy. It's kind of interesting, fun to see that escalate over time. What does everyone in the chat think about this? Imagine Zuckerberg coming at you and saying, "Here's some soup. Join my company, and
So
here's
good.
$500 billion in stock options." Yeah. Sorry. Go ahead.
I have a question for you.
Mm-hmm.
Are you looking at what's going on with copper?
I am interested in doing more research on copper. I know Chamath's been talking about
Can I
copper.
show you? No. Because of Chamath, can I show you what is happening right now?
Please tell me people are not bidding up copper.
Dude, people are bidding up fucking copper so bad. Let me just, I got to show you two things. I just ran the numbers. It is freaking crazy. So a 10-pound copper bar is going for $157. Okay.
Oh, shit.
Copper is selling at $5.98 a pound. A pound. Okay, a pound. Now, when I correlate this to silver, okay, 10-ounce silver bars, okay, $942.10 for 10 ounces. And an ounce of silver is going for $86.62. Okay.
Okay.
Now look at this correlation.
Stupid Chamath. He's trying to milk this, man.
Oh,
he's trying to milk this, bro.
Milking. This is criminal at this spread. Look at this. You're paying 8%. Okay. 8% over on spot. Because spot is 86 on the 10-ounce on silver, and the 10-ounce bar you're paying $94.21 an ounce. You're paying 8% over. Copper, you're paying 162% over fucking spot per pound of copper.
I wonder. Well, I know why the spread is probably so large. Because the effort to take something that's so low margin.
Because like everybody rolled into it because it was fucking pennies.
No. That's not it. That's not it. The reason why is like when you're die casting and you do all this stuff. I mean, imagine right now you have a $5 lump and you're basically going to refine it and put it like some stamps on it and go through the manufacturing process. So wholesale is definitely going to be cheaper than spot where you're creating all these stupid bricks. Like that takes effort and time to create these bullion bricks, right? So that's why the spot is going to be materially different. I mean, what's wholesale copper prices? Have they been shooting up? That's the main question.
I may have been on electrical supply company websites today, looking at sheet metal and stuff.
Wholesale copper price.
It's insane. The spread on fucking copper is insane. I can't believe what's happening. Like it's copper, and it's all because they are saying because it's on there's
going to be a shortage.
The national list for rare earth materials into 2040, and because it's one of the best conductors of energy, and we're going to need so much more of it, everybody's now freaking hoarding copper.
Well, then buy Freeport McMoran, FCX. That's it. If you're bullish on copper, if you're bullish on copper, Freeport McMoran, that's where you want to be. I mean, look,
the real question.
There's some silver miners that I shorted for a day, and then I sold the hell out of that short quick because it was gonna be a nightmare. Like I was just thinking about, I was like, bro, there's just too much. There's too much interest in this sector not to like ride it. But look at this company right here, Hecla Mining. Okay, Hecla Mining is up from April, right? $5 now $24. I was buying some puts on this thing around $18-20. I was thinking, oh, it's probably peaked, right? From what is that called? Like a historical RSI standpoint. This thing has been running even more. It's insane. It's at
The
$16 billion
miners are
now.
insane.
Yeah. No, I mean, eventually, I think if silver starts to come down, then these companies are going to get absolutely walloped like they've done in the past. Like if you see here in the past, they've had these green shoots where in 2010 silver ran up and it got to $11 and then kind of pulled back. I mean, this is how it happens. These cyclical businesses, people are just buying the crap out of it. Now it's around almost $25, man. So another one. Sorry, go ahead.
Did you watch the video I sent you at all?
Which one?
The silver one?
No.
Okay. So SD Bullion has now the Yankee stacking silver rounds with Tim's face on the freaking back from that show. Okay. Now I want to show you something what the last video is. And I watch these videos all the time because I'm a freaking nerd. And I do think that you should watch some of these videos. They're crazy. So Tim is now saying he can't get silver from the suppliers. Check this out. I can't play the video. I will link it. He can't get the silver. Insane silver shortage alarms bullion dealer. This is a legit big bullion dealer. I've been watching his videos for a long time.
Yeah.
It's crazy.
What's his name? Peter. What's his face? Like literally for 20 years, this dude has been, oh my God, just buy gold, just buy gold. And now he's like living it up. What's his face? Peter. You guys know what I'm talking about, who I'm talking about, right? In the chat, Peter. He's got an annoying voice. Peter Schiff. Thank you. Good job, Raven Tree. Peter Schiff. This dude, I remember for the last 20 years, bro. Every day. Buy gold, buy gold. And now he's been proven right because gold has outperformed everything since the year 2000. My mom is a better investor than Warren Buffett because she has been buying gold nonstop forever. So,
yeah, listen, gold's always been interesting. It just never moved until freaking now. And
that's because no one was questioning the value of the dollar. Now everyone's like, holy shit, I need to get in gold because I don't know if the US dollar is going to have primacy in 20 years. So every central bank is trying to diversify away from the dollar and they're all buying up gold. You know?
So you know what the crazy thing is? And this is what I'm going to say. Watch people start going to banks and buying boxes of pennies and sift through pennies for pre-82 pennies. Pre-82 pennies are 95% copper. I should not be saying this and giving anybody ideas, but you only need to find 154 pennies for a pound of copper.
Yeah, that's $1. That's too much work to do all that.
Think about this: $1.54, and the spread is right now is 567. Now, if you sift through them, you can always re-roll all the other pennies and trade them back in for more pennies. If you actually did this, you could actually probably make a good amount of money doing this as a side project. It sounds crazy, but the numbers are the numbers.
Yeah. I just think we have a administration who's very...
Look at this. Steve would be an elite crackhead.
Yeah, I don't know if I'm trying to go through the pennies and trying to find the copper pennies versus the
do you know what they used to do with the $half?
No.
So people would go to the bank and buy rolls of $half and silver dollars when they had them, cut open the top of the roll because they look different. They pull them out, and then after they do a couple of rolls, they just re-roll them, trade them back in, and pull them out for the silver content because you could distinguishly see everything that was, I think it was like pre-70 was the high silver content. People have been doing that for years.
I wonder if there's any machines that could automate this process for the US government where everything that comes in circulation, they just dump it in there and they just take all the stuff that has like high content and just pull that out. Like, doesn't that make sense for a bank to do that?
It does.
You know, like you remember back in the day, Coinstar Coinstar was around, but Commerce Bank, if you remember Commerce Bank, before they became TD Bank, they had that giant machine that you would put all your coins in and then it would count everything for you. Remember that?
Yeah, Coinstar.
No, I know Coinstar, but that Coinstar charged you a fee. If you went to TD Bank or you went to Commerce Bank, they did it for free.
Yeah.
Like in New York, that's what we used to do. We used to take it to Commerce Bank.
Oh, I did it. We filled up a 5-gallon Poland Spring jug one time of just freaking silver change.
Silver change?
Dude,
really?
You know how long that took us? I had to have somebody help me. I think we had like 6 or 7 duffel bags because of how we were afraid the duffel bags were going to rip. That shit was so heavy.
Yeah, when I was a kid, I used to cover, like, everyone had like a piggy jar. So I had my piggy jar, and every time my parents would come, I'd dig through their pockets for spare change, and I just put that in there. So one of the things my mom would be like, okay, look, you can grab the spare change if you do the laundry. So I'd be like, oh yeah, I'll do the laundry. And so this way, I'm pretty sure they purposely left a few coins in there to motivate me to keep doing the laundry. So I'd go through all my dad's pockets to find the coins, and I'd put them in the piggy jar. And eventually the piggy jar would get big enough, and then you would just take it and, you'd have like a pizza party or something. So good times. All right. I think that's it. We're on an hour and 20 minutes. So
yeah. Just give me 1 sec. So, all right. I'm not crazy, everyone. People really do this, and they make YouTube videos about it. Like, I'm not freaking crazy. This video of them going through 50 rolls from 5 different banks looking for freaking quarters, silver quarters and stuff, 106,000 views.
There's a guy in the city that's been working on the diamond district. This guy's been collecting like dust from everywhere and seeing if he can find gold.
Oh, I see that. Yes.
So many people will do everything possible not to have like a 9-to-5 job. Like,
yeah, these are the boxes I'm talking about. They're going and buying the freaking boxes from the bank, and they're going through them, and they're pulling out all the silver ones and then re-rolling them back because you're getting the same money back. I'm not crazy. This shit's real.
Yeah.
This shit is real.
Yeah, no, I've seen videos of people just literally hoarding these precious metals. I mean, hey, listen, they're in their heyday now.
Yeah, so what Chris is talking about, this guy legitimately crawls on the floor with some like little handheld metal thing, and he's looking for like the little speckles of gold and silver, and I've seen it. It's freaking crazy.
It's NYC sidewalk gold guy. This guy right here. Hold on. People, I'm telling you, people outside New York, when they see shit like this, like, there's no way.
No, it's true.
It's
it's freaking true.
Not this guy. Gold.
That tracks. Yeah, they legit now. My thing is this set up or not? I have no idea if this is set up for views or not, but
yeah.
No,
I mean, look at this.
Yeah, they're crazy.
Wait, can you hear that? Let me just.
We don't put the volume on.
No, it's not a copyright. It's not. There's no audio. So let me just share screen and audio share on Chrome tab. Okay, there we go.
There is a man who makes a living by mining the streets of New York. He takes a butter knife and tweezers out at night and scrapes away at the edge of sidewalks, mostly around jewelry shops, as what he's looking for is bits of diamonds, rubies, platinums, and gold which might have been dropped by people and lost. And because he's mining for gold or minerals that have already been cut and manufactured, all he has to do is extract it from the dirt and gum of the streets, clean it up, and sell it on. He even said he collected enough gold for 2 sales totaling 819 in 1 week. But is having to sift through the gunk of the New York streets really worth those riches? There is a man who...
Can you believe that?
I mean, so I also saw one where these guys were, this is going to sound so fucking weird, they were scavenging for old TVs and old computers, and they were ripping the boards out of them, and they went to this place where the chemist was, and they used sulfuric acid and some, maybe not sulfuric acid, but they used a bunch of different compounds to basically melt and burn away all the plastic and everything and left them with the raw materials. And then they did some other concoction to separate the gold from everything else. I mean, they were throwing sticks of RAM in there, motherboards, freaking all these types of boards. And they got enough from all these things for like a gold thing like that. It was freaking crazy.
Someone was like, I live off Treasure Coast. I'm going searching for gold coins.
People are crazy. I love it.
Yeah.
I love it.
All right. I'm going to get some rest, brother. Have a good
Yep.
night.
Good seeing you. I will talk to you later.
Take care.
Later, Chris. So that was the DD on Zeta. We went down a couple of rabbit holes. Trade desk, which looks interesting from a value perspective. The craziness on copper. And then you got Matt Money sending me pictures. And I got to tell you, his pictures are freaking crazy. All right. We can start with Steve's commute home, which Matt is ridiculous, having me choke somebody on the way home. For anybody who has heard me call into a Mitch show, sometimes, you know, things happen. Sometimes things happen. He then, during the stream, sent me the $100 milk bill. The $100 milk note is what he sent. So this is what Matt does to try to make me laugh, which is hilarious, and I did laugh a lot. And then he sent me this and said that I should do members-only Q&A streams and use this. Not a jacket I would wear, but the picture's amazing. And I would definitely drink scotch and love the cigar. But, you know, maybe we'll do a Q&A members only. But yes, Matt is hilarious. And in milk we trust. That's right. In milk we trust. So, yeah, I'm going to go down the rabbit hole with the coins. I mean, I should have done this a while ago. But, yeah, we'll see. I wouldn't mind going and buying a $1,000 box of silver dollars or something and seeing if there's any old ones from the 60s that have a high silver content and then bringing them back. We need Steve to make a SPAC to buy dairy farms. Oh, that would be freaking hilarious. Members only jacket. Is it? Maybe I'll have to buy one then. If I do a members only stream, wear a members only jacket. We'll see. All right, everyone. I'm going to get done. I need to finish some work before I go to sleep. Fortunately, still have to work tonight. And I will be back tomorrow. I'm going to read up on the meta stuff. I want to see what Zuckerberg said. I need to look at a few things. And I'm going to do a dive on meta tomorrow night, probably. I think Matt and I may do an update also. I will not be on until 8 or 8:30 tomorrow night. I have a meeting at 7 p.m. until 8, and I will be on after that. So I will see everybody. Oh, hold on. Do I use my couch? June wants to know. Baby Yoda hasn't moved. I sat where I moved Baby Yoda on top of the blanket, and I was sitting there reading for about 20 minutes the other day, and then I put Baby Yoda back in his seat. So no, I don't really use it much. Once in a while, if I don't feel like sitting in this chair, if I want to read something on the tablet. Let's see. Man, notifications don't stop. Fun fact that if that Yoda was full of copper, I'd be pretty freaking happy. I cannot believe the freaking spread on copper right now. It is crazy. I don't understand it. I mean, 100 for silver. I wouldn't be shocked about that at this point. Time lapse. Thank you. It's called coin roll hunting. Maybe I'll make some videos of it. Maybe we'll do it. You know what? If there's anywhere to do it, it's here because I have huge banks near me, so in the city. So yeah, maybe we'll do it. So let me ask you this. All right, before I go, we still have a bunch of people here. I'm going to put out a very quick poll. Would you guys watch me buy one of these gigantic boxes and go coin roll hunting? Let's see. If you guys would get a kick out of it, and if you think it would be fun watching me go crazy doing that, I could be compelled to doing it. So let's put the poll out. All right, starting the poll. Would you watch me go coin roll hunting for silver? Wow, a lot of people actually want. You guys want this? If you guys want this, I'll do it. Wonder how much silver we can freaking make. All right, while this poll is going, let's ask ChatGPT, what was the last year silver was used in quarters, dimes, nickels? Because I actually don't know. I think it was like 68 or 72. All right, I guess I'm wrong. Dimes, 1964. 90% silver, 10% copper. Quarters, 1964. 90% silver, 10% copper. Nickels, 1945, 35% silver. So dimes and quarters are what we want to do. Dimes and quarters. Probably quarters because they're just heavier. 90% silver. We need 1964 and earlier. All right, 62% of you said yes. Maybe we'll make a video of it. See what happens. $50. June, I think you're right. Dimes may have better, maybe we'll do a box of each. All right, Dougie, you have 1,500 pounds of quarters. Are they pre-64? Tell me you just bought bags of junk fucking silver. Tell me that's not you just spending $1 to get change. That you actually just bought junk silver. Please. Please, please, please. Oh, I own a laundromat. That would make sense. Okay. That would make a lot of sense. Oh, Dougie, I think you got to freaking start going through those quarters and looking for pre-64s. I don't want to come sort your quarters. I appreciate it. I do not want to sort your quarters. I think I'm gonna do it, guys. I think I'm gonna get a freaking. I'm gonna go to the bank tomorrow. I'm gonna tell them I want a box of dimes and I want a box of quarters. And if they don't have them, I'm gonna tell them that I want them to order it for me, and we're gonna do it. I don't know when we're gonna do it, but we're gonna do it. It's gonna have to be on a weekend because I'm gonna need a lot of freaking time. I'm gonna need 2 cameras also. I'll do a dual camera setup. I'll get a boom arm from yeah, Trace. I got another camera right there that I'm looking at. I'll get a boom arm from Amazon. We'll put it on and we'll sift through them. Hunting for Silver Stream coming to YouTube by the Milkman at some point in the next couple of weeks. It's not going to be this weekend because Amit and I are going to the card convention on Saturday. So I don't know what Saturday night's going to be like. Maybe we could do it Saturday night. Let me see. Let's see. I will. I'm going to talk to the bank tomorrow and get after it. Can I metal? I'm not going metal detecting. Oh, I'm not going to touch that comment. I am not going to touch that comment. I mean, you want to know what's crazy? You guys are talking about metal detecting. I watch The Curse of Oak Island religiously. I would not be opposed to freaking getting a high-powered metal detector and walking around the freaking beaches on the coast of like the Carolinas or something. And listen to have a podcast in one ear. Oh, whoa, whoa, whoa. We have other people that watch The Curse of Oak Island. Wow. Love that show. Love it. They never find anything. By the way, industry was so legit last night. It was a good setup episode. I'm excited for the rest of the season. It's going to be freaking good. Top pocket finds. Wow, Lunar. We really do have some Oak Island aficionados. Top pocket finds. Love it. Yeah, it's incredible. What's going on, Christy Love Jones? Dinner was eggs, peppers, onions, sausage. I had breakfast for dinner tonight. When am I going to show you the cigar collection? Maybe tomorrow night with Matt, since he loves cigars. Break out some of the opuses. Opus X. Yeah, Drain lives in Florida. Which one? Lost City, Perfection. They have what, 5 different Opus lines? Padron 26, nice. I got some stuff in those humidors. I can tell you that right now. I got some stuff. Looks like we have some cigar aficionados in here. I got some interesting stuff back there. We'll go through it one night. All right, everyone. I got to get some more work done. I will be back tomorrow night, and I appreciate everybody hanging out with us. Is it? I have no idea if it's legal. I mean, I can't. Why wouldn't it be legal to metal detect Central Park? I have no idea. I have no idea. All right. I will see everybody tomorrow night. Enjoy the rest of the evening. Hopefully you enjoyed the dive on ZETA. I like the numbers. I'm probably going to get into it soon. Oh, Matt Money. I showed them the bill. I showed it to them, Matt, and I showed them Steve's adventure home in the car and the members only one. I showed them all of them. Matt is the champion of thumbnails. Everybody thought I was the champion of thumbnails. Matt is the champion of thumbnails. I mean, when you start making thumbnails like this, you become the champion. Matt. All right. I will see everybody tomorrow. Have a great night. Bye-bye for now.